The net worth of PSU companies has skyrocketed, reaching more than 17 lakh crore rupees, compared to 9.5 lakh crore rupees in 2014. In a recent statement, Prime Minister Modi highlighted the positive momentum, stating that most PSU shares are currently providing robust returns. So, what's driving this surge in PSU stocks, and what does it mean for investors? If you are new to my channel, please do subscribe. Also, check out my playlist, Best Stocks to Buy for the Long Term. In the budget, the Finance Minister announced plans to raise 14.13 lakh crore rupees from the market through debt securities or bonds. Here is where the PSU banks come into play. But why PSU banks and not private banks? When the government needs to raise funds, they issue bonds, and in 2023, foreign investors invested 8,000 crore rupees in the debt market. JP Morgan Chase Co. has even added Indian government bonds to its emerging bond index, effective from June 20, 2024. This move is set to benefit PSU banks significantly, as they hold a major share of these government bonds. The Finance Minister's fundraise announcement is expected to boost the value of India's year bond prices, directly benefiting PSU banks. This is crucial because most government bonds are held by PSU banks. Today, we are going to discuss the top 8 PSU bank stocks to buy now. We are excited to announce the launch of a new Hindi YouTube channel. Explore our content in Hindi and consider subscribing to stay updated. So let's get started. The first stock is Punjab National Bank, which is a leading public sector bank in India. Established on April 12, 1895, in Lahore, Punjab National Bank has a rich history as the first bank managed purely by Indians with Indian capital. Fast forward to today, PNB is a prominent banking and financial service institution owned by the Government of India, headquartered in New Delhi. PNB boasts an extensive branch network with a total of 52,331 touchpoints, including 10,108 domestic branches, 12,455 ATMs, and 29,768 business correspondent outlets. Notably, 39% of branches are in rural areas, and 24% are in semi-urban areas. PNB takes pride in its massive customer base, with over 18 crore customers post-merger. The bank's corporate loan book is diversified across various industries, with top exposures including energy, roads, ports, basic metals, telecom, textiles, and chemicals. PNB has expanded its reach globally with branches in Dubai and Gift City, Gandhinagar, subsidiaries in London, UK, and Bhutan, a joint venture in Nepal, and representative offices in Myanmar and Bangladesh. Punjab National Bank, with a market capitalization of 1,33,949 crores, operates with a current stock price of 121 rupees. Price-to-earning ratio is 17.59, higher than its sector pay ratio of 13.82. Stock price rose 137.16% and outperformed its sector by 69.61% in the past year. Debt-to-equity ratio of 0.74 is less than 1 and healthy. The return on equity, ROE, for the last financial year was 3.54%. The company is generating increasing cash from operations. The company is giving better long-term returns than the industry. The NPA trend is stable or decreasing for 3 quarters. The provisioning trend is stable or decreasing for 3 quarters. Currently, the CASA, current account savings account, ratio stands at 41.99%, with a total deposit of 12,81,163.10 crores. Looking at advances, PNB has seen a year-on-year rise of 14.10%, and over the past 3 years, it has grown by an impressive 20.76%. PNB has a good capital adequacy ratio of 15.50. The best metric which provides insights about the bank's valuation is PB ratio. Currently, PNB is trading at a PB of 1.38. The historical average PB was 0.58. The company has delivered good profit growth of 95.37% over the past 3 years. The second stock is Bank of India. Bank of India operates through various segments, including treasury operations, wholesale banking, and retail banking. The treasury operations segment encompasses the investment portfolio, dealing with government securities, money market operations, and foreign exchange activities. Bank of India boasts an extensive branch network, currently operating 5,083 branches and 5,690 ATMs across India. Beyond the borders, it has 23 branches in other countries, contributing to its global presence. The domestic loan book is diversified, with corporate others accounting for 37%, followed by retail, 18%, MSME, 17%, agriculture, 15%, and government advances, 13%. In the retail book, home loans hold the lion's share at 59%, followed by mortgage, 10%, auto, 10%, education, 5%, personal, 4%, and others, 12%. Bank of India's international footprint includes 24 branches, 1 representative office, 4 subsidiaries, and 1 associate joint venture spread across 20 countries. Foreign business presently contributes 12.5% to the bank's total business. The bank operates through several subsidiaries and joint ventures. Punjab National Bank, with a market capitalization of 63,123 crores, operates with a current stock price of 133. Price to earning ratio is 9.86, lower than its sector pay ratio of 13.82. Stock price rose 69.03% and outperformed its sector by 1.48% in the past year. Debt to equity ratio of 1.22 is higher than 1. Return on equity, ROE, for the last financial year was 7.17%. The company is giving better long-term returns than the industry. The NPA trend is stable or decreasing for 3 quarters. The provisioning trend is stable or decreasing for 3 quarters. Currently, the CASA, current account savings account, ratio stands at 38.41%, with a total deposit of Rs 6,69,585.77 crores. Looking at advances, Bank of India has seen a year-on-year rise of 15.46%, and over the past 3 years, it has grown by 9.62%. Bank of India has a good capital adequacy ratio of 16.28. Currently, Bank of India is trading at a PB of 1.00. The historical average PB was 0.53. The company has delivered good profit growth of 49.79% over the past 3 years. The third stock is Bank of Maharashtra, a pioneer in the banking sector. The bank operates through various segments, including treasury, corporate wholesale banking, retail banking, and other banking operations. Bank of Maharashtra boasts an extensive branch network, currently operating 2,029 branches and 1,850 ATMs across India. Notably, 33% of these branches are strategically located in rural areas, contributing to financial inclusion. Moving on to the loan book composition, the bank's lending portfolio is diversified across various sectors. Corporate others, 39% retail, 26% MSME, micro, small medium enterprises, 19% agriculture, 16%. A noteworthy subsidiary of Bank of Maharashtra is Maharashtra Executor Trustee Company PVT Limited. It operates as a 100% subsidiary, providing auxiliary services to the bank, including consultation, drafting execution of will, management of investments, guardianship of minors' property, and consultation for sale purchase of property. Bank of Maharashtra, with a market capitalization of 42,495 crores, operates with a current stock price of 61. Price to earning ratio is 11.54, lower than its sector pay ratio of 13.82. Stock price rose 115.91% and outperformed its sector by 48.36% in the past year. Debt to equity ratio of 0.75 is less than 1 and healthy. Return on equity for the last financial year was 18.19%. Company is giving better long-term returns than the industry. The NPA trend is stable or decreasing for 3 quarters. The net interest margin is stable or increasing since 3 years. Currently, the CASA, current account savings account, ratio stands at 53.38%, with a total deposit of Rs 2,34,082.68 crores. Looking at advances, seen a year-on-year rise of 30.53%, and over the past 3 years, it has grown by 25.38. Bank of Maharashtra has a good capital adequacy ratio of 18.14. Currently, Bank of Maharashtra is trading at a PB of 2.43. The historical average PB was 0.95. The company has delivered good profit growth of 88.49% over the past 3 years. The fourth stock is Union Bank of India. Union Bank of India is a prominent player in the banking sector, offering a wide range of services such as banking, government business, merchant banking, agency business insurance, mutual funds, and wealth management. Union Bank of India boasts an extensive branch network, With 8,580 branches and 10,835 ATMs across India. Interestingly, this network nearly doubled after the merger with Andhra Bank and Corporation Bank. Breaking down the loan book, corporate advances account for 45%, followed by MSME, 19%, retail, 18%, and agriculture, 18%. Home loans dominate the retail book, constituting 54%, along with mortgage loans, vehicle loans, education loans, personal loans, and others. While the bank has a minor presence outside India, its overseas business contributes to approximately 2% of the total business. Union Bank of India has established a presence in key financial centers like Hong Kong, DIFC, Dubai, and Sydney. Over the past few years, the government has infused considerable funds into the bank. The merger with Andhra Bank and Corporation Bank in April 2020 was a significant milestone for Union Bank of India. This merger nearly doubled the total business of the bank. Union Bank of India, with a market capitalization of 1,08,741 crores, operates with a current stock price of 144. Price-to-earning ratio is 8.19, lower than its sector pay ratio of 13.82. Stock price rose 95.88% and outperformed its sector by 28.33% in the past year. Debt-to-equity ratio of 0.59 is less than 1 and healthy. Return on equity for the last financial year was 11.72%. The company is generating increasing cash from operations. The company is giving better long-term returns than the industry. The NPA trend is stable or decreasing for 3 quarters. The net interest margin is stable or increasing since 3 years. Currently, the CASA, current account savings account, ratio stands at 35.26%, with a total deposit of Rs 11,17,716.32 crores. Looking at advances, has seen a year-on-year rise of 15.26%, and over the past 3 years, it has grown by 34.22%. Union Bank of India has a good capital adequacy ratio of 16.04. Currently, Union Bank of India is trading at a PB of 1.23. The historical average PB was 0.48. The company has delivered good profit growth of 69.97% over the past 3 years. The fifth stock is Indian Overseas Bank. Founded in 1937 by Chidambaram Chettar, this bank has played a crucial role in India's banking landscape. The Indian Overseas Bank was among the 14 major banks nationalized in 1969. Presently, the Indian Overseas Bank operates around 3,200 branches and approximately 3,100 ATMs across India. Interestingly, the majority of these branches are strategically located in rural and semi-urban areas. Moving on to the loan book, it's diversified with retail, agri, MSME, and corporate other segments. Home loans lead the retail category, accounting for 48% of the loan book, followed by education, 14%, auto, 9%, and others, 29%. The bank has expanded its footprint internationally, with branches in Singapore, Hong Kong, Bangkok, and Colombo, along with a remittance center in Singapore. Overseas deposits contribute around 2% to the total deposits. Approximately 40% of corporate loans are classified as non-performing assets, NPAs. Only 44% of corporate loans are rated A or above, with the remaining 56% rated BPP or below. The Indian Overseas Bank holds an 18% stake in Universal Sompo General Insurance Company Ltd, a non-life insurance business, in collaboration with other investors. The government has played a role in the bank's capital infusion over the years. Indian Overseas Bank, with a market capitalization of 1,18,386 crores, operates with a current stock price of 67. Price-to-earning ratio is 47.09, higher than its sector pay ratio of 13.82. Stock price rose 155.39% and outperformed its sector by 87.84% in the past year. Debt-to-equity ratio of 0.84 is less than 1 and healthy. Return on equity for the last financial year was 8.45%. The company is giving better long-term returns than the industry. The NPA trend is stable or decreasing for 3 quarters. Currently, the CASA, current account savings account, ratio stands at 43.74%, with a total deposit of Rs 2,60,883.29 crores. Looking at advances, has seen a year-on-year rise of 23.44%, and over the past 3 years, it has grown by 13.64. Indian Overseas Bank has a good capital adequacy ratio of 16.10. Indian Overseas Bank is trading at a PB of 5.14. The historical average PB was 1.43. The company has delivered good profit growth of 30.96% over the past 3 years. The sixth stock is Central Bank of India, a prominent commercial bank. It operates across various segments, including treasury operations, corporate wholesale banking, retail banking, and other banking businesses. Central Bank of India boasts an extensive branch network with approximately 4,500 branches, out of which 65% are located in rural and semi-urban centers. The bank also operates around 2,900 ATMs and 10,300 business correspondent outlets, covering 28 states and 7 union territories. When it comes to loans, 34% of total advances are corporate advances, followed by retail, 28%, agriculture, 20%, and MSME, 18%. Notably, home loans account for a significant portion of the retail book, making up approximately 57%. The bank is strategically positioned in various sectors, with the highest exposure to infrastructure, 11%, followed by engineering, 3%, basic metals, 2%, construction, 2%, food processing, 1%, and textiles, 1%. The bank holds a 35% stake into rural regional banks, Uttar Bihar Gramin Bank in Bihar and Uttar Banga Kshetriya Gramin Bank in West Bengal, with a combined network of approximately 1,200 branches and deposits worth around 20,000 crores. Central Bank of India, with a market capitalization of 56,183 crores, operates with a current stock price of 66. Price to earning ratio is 23.03, higher than its sector pay ratio of 13.82. Stock price rose 141.12% and outperformed its sector by 73.57% in the past year. Debt-to-equity ratio of 0.33 is less than 1 and healthy. Return on equity for the last financial year was 6.56%. The company is giving better long-term returns than the industry. The NPA trend is stable or decreasing for 3 quarters. The net interest margin is stable or increasing since 3 years. Currently, the CASA, current account savings account, ratio stands at 50.46%, with a total deposit of Rs 3,59,296.47 crores. Looking at advances, has seen a year-on-year rise of 20.70%, and over the past 3 years, it has grown by 10.34. Central Bank of India has a good capital adequacy ratio of 14.12. The Central Bank of India is trading at a PB of 2.11. The historical average PB was 0.67. The company has delivered good profit growth of 50.53% over past 3 years. The seventh stock is Punjab and Sind Bank. Punjab Sind Bank operates a whopping 1,529 branches across India. Notably, 37% of these branches are strategically located in rural areas, showcasing the bank's commitment to serving diverse communities. Additionally, the bank boasts approximately 1,100 ATMs, contributing to its accessibility for customers nationwide. Now, let's take a closer look at Punjab Sind Bank's loan book and how it is diversified across various sectors. Corporate advances, 52% MSME, 18% agriculture, 15% retail, 14% food credit, 1%. Corporate advances dominate the portfolio at 52%, followed by MSME, agriculture, retail, and food credit. Punjab Sind Bank offers life insurance policies in collaboration with LIC and SBI Life Insurance. Furthermore, the bank provides general insurance policies through partnerships with Oriental Insurance, New India Assurance, and Bajaj Allianz General Life Insurance. Punjab and Sind Bank, with a market capitalization of 49,051 crores, operates with a current stock price of 73 rupees. Price to earning ratio is 53.61, higher than its sector pay ratio of 13.82. Stock price rose 161.36% and outperformed its sector by 91.63% in the past year. Debt-to-equity ratio of 0 is less than 1 and healthy. Return on equity for the last financial year was 8.69%. The company is giving better long-term returns than the industry. The NPA trend is stable or decreasing for 3 quarters. Currently, the CASA, current account savings account, ratio stands at 33.59%, with a total deposit of 1,09,665.49 crores. Looking at advances, seen a year-on-year rise of 20.73%, and over the past 3 years, it has grown by 9.56. Punjab Bank has a good capital adequacy ratio of 17.10. Currently, Punjab Bank is trading at a PB of 3.38. The historical average PB was 0.70. The company has delivered good profit growth of 49.26% over the past 3 years. The eighth stock is Indian Bank. Indian Bank has been serving its customers for over a century, offering a wide range of financial services. The bank is divided into several segments, including treasury, corporate wholesale banking, retail banking, and other banking operations. Indian Bank's loan book provides us with a glimpse into its lending priorities. Corporate loans dominate with 44%, followed by agriculture at 20%, MSME at 18%, and retail at 18%. Digging deeper, crop loans make up a significant 82% of total agriculture loans, while home loans contribute 69% to the retail portfolio. Indian Bank has expanded its reach with branches in Singapore, Colombo, and Jaffna. Additionally, the bank has commenced operations at PSU Banking Unit, IPU, in Gujarat. Digital transactions have surged from 16% to 29% from the financial year 19 to financial year 20. Moreover, the bank has achieved a milestone by enabling 100% of its ATMs to accept EMV cards, enhancing the overall customer experience. It holds a 51% stake in Bank Housing Ltd, focusing on housing loans. Additionally, with a 65% stake in Bank Merchant Banking Services Ltd, the bank is involved in various financial activities, from merchant banking to online trading. Indian Bank has a significant presence in rural banking with a 35% stake in 3 regional rural bank, RRB, associates. Indian Bank, with a market capitalization of 73,039 crores, operates with a current stock price of 537 rupees. Price to earning ratio is 9.56, higher than its sector pay ratio of 13.82. Stock price rose 84.69% and outperformed its sector by 15.33% in the past year. Debt to equity ratio of 0.51 is less than 1 and healthy. Return on equity for the last financial year was 12.83%. The company is giving better long-term returns than the industry. The NPA trend is stable or decreasing for 3 quarters. The provisioning trend is stable or decreasing for 3 quarters. Currently, the CASA, current account savings account, ratio stands at 41.99%, with a total deposit of 6,21,165.76 crores. Looking at advances, seen a year-on-year rise of 15.45%, and over the past 3 years, it has grown by 31.43. Indian Bank has a good capital adequacy ratio of 16.49. The company has delivered good profit growth of 91.39% over the past 3 years. Remember, always conduct thorough research before making investment decisions. I hope you found this video informative, and subscribe to our channel for more informative videos.